It can be defined as any form of accounting that it determines the position of liquidity and profitability. Sales is 4,50,000, sales return is 30,000, GP is 90,000. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Management Accounting 6th semester session 1 of BCom in favor of Model Question Paper 25-26. So they will ask the question for 2 marks, then 10 marks, then 15 marks. Today, in this session, I am going to solve 2 marks question and answers. We'll move on to question now. 2 marks question. Define management accounting. This is definitely ask you. Define management accounting. It can be defined as any form of accounting which enables a business to be conducted more efficiently can be regarded as management accounting. This is important here. Conducted more efficiently can be regarded as management accounting. So what is management accounting? It can be defined as any form of accounting which enables a business to be conducted more efficiently can be regarded as management accounting. List any 2 limitation of financial statement. List any 2 limitation of financial statements. Financial statements are historical in nature as they record past events and facts. Only past events and facts. Financial statement is based on only monetary quantitative information and non-monetary qualitative factors are ignored. Number 3. Mention 2 merits of cash flow statement. That it determines the position of liquidity and profitability. Number 2. Smooth movement of cash inflows and outflows of a business. Smooth movement of cash inflows and outflows of a business. Number 4. Mention 2 determinants of cash flow statements. Mention 2 demerits of cash flow statement. Which are the demerits or disadvantages are facts to be present, correct net income, not possible to assess profitability. Facts to present, correct net income, not possible to assess profitability. What are objectives of management audit? What are the objectives of management audit? Management audit often includes gathering feedback from employees at various organization level. Number 2, management audit assess potential risk of the management. Number 3, to evaluate management effectiveness. Number 4, to identify strength and weakness. One by one. Management audit often includes gathering feedback from employees at various organization level. Number 2, management audit assess potential risk of the management. Number 3, to evaluate management effectiveness. Number 4, to identify strength and weakness. 6th question. State 2 differences between management audit and financial audit. This is financial audit, this is management audit. It is quantitative in nature, it is qualitative in nature. This is quantitative, it is qualitative. Number 2, they are and scope of financial audit is limited. Management audit is very wide and comprehensive. Calculate GP ratio. Sales is 4,50,000. Sales return is 30,000. GP is 90,000. So net sale is 4,50,000 minus 30. So GP ratio is equal to gross profit divided by net sale into 100. GP ratio, gross profit divided by net sale into 100. Total sale minus return 4 lakh 50, 4 lakh 20. Your profit is 90 divided by 4 lakh 20 into 100, 21.43%. Calculate earning per share. Profit before interest and tax 2 lakh, 8% debt is 3 lakh, corporate tax is 30%, 10,000 equity share of rupees 100 each. Profit before interest and tax 2 lakh, interest on debt, your amount is here 3 lakh, into 8 by 100. This is 24,000. Balance is 1,76,000. Earning before taxation minus tax at 30% on this 52,800. If we deduct this 52,800, it will come 1,23,200. It is earning after taxation. Earning per share EPS, earning after taxation divided by number of share, 1,23,200 divided by 10,000 share. It works 12 rupees 32 paisa per share. How it will be? 2 lakh minus interest on debt 24,000. Balance is earning before taxation. This is earning before taxation. Tax at 30%. Earning after taxation is 1,23,200. Earning per share. Earning after taxation divided by number of share 12.32. Obtained from financing, operating and investing activity during an accounting period. Mention 2 objectives of ratio analysis. Number 1, to know the areas of the business which need more attention, to provide information derived from financial statement useful for making production and estimate for the future. Calculate earning per share. Your EBIT is 6,77,500. 10% debenture 7,50,000. 8% preference share capital 5 lakh. 5,000 equity share of 100. Tax at 25%. EBIT 6,77,500. Interest on debt 75 10 by 100 is 75,000. Balance is 6,02,500. Earning before taxation, tax at 25%, 1,50,000. 625. Earning after taxation, 4,51,85 minus preference dividend. This is 50,000. 8 by 100 is 40,000. If we deduct no, 4,11,875. Earning per share 4,11,875 divided by 5,000, 82.37. How it will be? EBIT is 6,77,500 minus interest on debt 75,000. 7,50,000 into 10 by 100 is 75,000. Balance is 6,02,500. Tax at 25% on this 1,50,625. Earning after taxation 4,51,875 minus preference dividend 50,000. 8 by 100 is 40,000. It comes to 4,11,875. Earning per share 4,11,875 divided by 5,000, 82.67. Write a note on trend analysis or trend percentage. It is one of the important technique of analysis of financial statement. It may be analyzed by computing trends of series of information, comparison past data over a period of time with a base year is known as trend analysis. What is trend analysis? It is one of the important technique of analysis of financial statement. It may be analyzed by computing trends of series of information, comparison past data over a period of time with a base year is known as trend analysis. So we all solved the 2 marks question from all the question paper. Hope you understand this. We'll meet in the next session with 10 marks. So we have solved the 2 marks question. In the next session, we'll take up 10 marks question. Another next session, we solve 15 marks question. Hope you understand. We'll meet in the next session with 10 marks question.